The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, 19147. Folks, we're going to take a look here at the DAX. As you can see, we've actually broken down more than this. This was posted about 2 hours ago. If we take a look at the FTSE, you'll notice that it also is starting to break quite a bit below the 78% level, and that's a daily chart. That's not a good chart. The big problem, folks, is in the interest rate market. We're basically in a free fall, and interest rates were up a little bit today, if you can call this a flight to quality. But you know, the long-term picture in the bonds tells us that we're most probably going to go a great deal higher in interest rates, i.e. lower bonds. You can see our price objective is 12 handles lower, down at the 125.20 level. So that's what it looks like. In fact, look at this big range that we had last week. We went from 141 down to 136 and change, a 5-point handle, and we went way below the 78% level. But as I say in the trade, not all is lost. Let's take a look here at the Treasury notes. Now, this is the largest of all the commodity markets in the world. They have a bigger open interest than anything by a long shot. And if you'll notice here, we're only about 1.25 handle from a 61% retracement, okay? And that completes that head and shoulders pattern that we talked about, you know, way back last year. This is the weekly chart. And, you know, it was perfectly symmetrical from your left shoulder to your right shoulder, and the right shoulder much lower than the left shoulder, also very, very bearish. If you'll notice that dark red line, that was also a 20-man line that acts like a fulcrum, pushing the prices lower. I believe this is where we're going on this move, and then we should get a really substantial rally from that level. That comes in just about 116 even in the Treasury notes. We're trading a little above 117 right now, so kind of keep an eye on this. This is something that'll be really important from a holding it from a standpoint. But remember, this thing has been bearish now for several years. You know, rates have been going up for several years, so this is actually, you know, not much of a surprise. So let's kind of remember that. Now, we're going to take a trip across the pond here in the Pacific Ocean, and we're going to take a look at this Hang Seng, because we got down to 26,255 last night. We were down 1.4%. The Chinese market that had been closed opened, and it got hammered pretty badly. It forced the Chinese Federal Reserve Bank, the PRBOC, People's Republic Bank of China, to they change their way that they allow their reserves to be handled, and that's a good thing. But look at this Hang Seng chart for just a second, folks, going back to August. Look at August 13th into the 27th. The market rallied exactly 78% of that high on the 23rd of July, which was a 382 retracement. It then came down and then rallied up into September the 25th, again, exactly at the 78% level. Now, if you like harmony in the markets, if you would just count the number of bars in August and count the number of bars in September, you would see that these are equal. That makes a perfect ABCD pattern. Now what we're looking at is a potential 3-drive pattern coming down here in this New York, in the Hang Seng at 25,900. That's only 300 points from, oh, it's more than that. It's 500 points, 2600. Yeah, 400 points from where we are right now. So we might be looking at a bottom here, but boy, it doesn't look good on the chart base. If you remember the long-term weekly chart in the I've got to post that long-term weekly chart because it's that important, folks, in the Hang Seng, because it is really, I must do that right now. I don't even want to stop and think that I might forget about it, because I believe it's that important, because I remember that 61% retracement is right there, and we need to look at this, because we are going to be watching this very, very, oh boy, this could really be a play, folks. Oh, this darn machine, what is going on? Please don't do this to me. Ah, shucks. Hold on just a second, folks. Let's get this up here. You'll see the importance of this. There we go. Hopefully I'll be able to get this out of the way here, and then we'll be able to look at something here. Bear with me just a minute, folks. It's that, oh, shucks. I'm having trouble with Ensign this morning. Boy, it's just acting so darn crazy. I just don't know what to do. All right, take a deep breath and let's see if we can get this thing. I know what I can do. I can send it to myself and then send it to you. Hate to do it this way. It's going to be a little bit longer, but to me, from a technical basis, this is it's that important, folks. So let's just look at it here as soon as we get it up. And where is it here? Bada bing, bada boom. Uh-oh. Here it is. There we go. Let me get. It's Columbus Day. That's correct. Big day in Italy. Big day in, well, it's not actually a big day in Italy. They don't even promote it, but in New York it is, because it's right there on near the Chapel of San Gennaro, and that is near where my great-grandparents moved in 1913, I believe. They lived on Willow, I believe, right off of, you could see the after it was built, of course, which was in 1929, was the Empire State Building. Anyway, you'll notice this Hang Seng Index, folks. This number that we're looking at, see, we're trading at 26,200 now. So we're going to go down and test it one more time, and that could be that 618 and 50% level. So that could be a very important bottom. We need to watch that, because anything below 26,000 or 25,500 would certainly negate it, but that's it. As far as our market, we've had some little bit of a sell-off, not much, hasn't really done very much at all, but we've had a pretty good sell-off in the IWM. That's the one that has taken the brunt of it, and we believe that topped back in early September. Yes, everybody passed. My mother, my father, my great-grandparents and my grandparents all passed through Ellis Island. Yep, there's a record of them there. Hold on here just a second. They all came through at different times. My mom came after my dad because she was younger, and but they came through Ellis Island. My mother went to Saratoga, New York, and my father, his family went to Indiana, because my grandfather was a coal miner. My grandfather on my mother's side, what am I telling you all this stuff for? He made salami and grappa, which is corn whiskey, and he also made wine. Anyway, let's move on to what's really important here. We got a couple of big charts that I think we need to pay very close attention to. One, of course, we were just talking with Jason on this. This is the natural gas. Look at this. Look at this big ABCD in natural gas, spoke with a possible double top.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, in 12 minutes, we're going to be rewarded by the presence of Norm Winsky of Astro Trend. He'll be our guest at the half hour. We're going to talk a little bit about the silver market here. We were mentioning it on Friday, the fact that it was making these lower highs. Same thing was happening in gold. That led to the possibility, because we have a new moon today, that we could have had a pretty big sell-off, and we have certainly done that. We're down quite a bit in the silver. As you can see, we've reached the objective that we were looking for, which was 1432. There's nothing bearish about these charts in either silver or gold, in my opinion. They're just actually doing their usual thing. If you look at the gold market, one of the things that we were talking about in the newsletter this week was the possibility that we could get another break, down to that area of even 1177. We've been as low as 1187 so far this morning. Whether that holds or not, we'll have to wait to be seen. But remember, gold reacts really strongly to new moons and full moons. So with a new moon today, that should be something that we're interested. Maybe we'll find out from Norm if there's some other things that might make a interesting bottom here in the gold market. So we'll take a look at that. Folks, take a look here at the emerging markets. This is all part of the things that are going on in Asia. We're down again. Last night we were quite a bit lower. You'll notice that at 40.84, that was the price of Friday. I didn't even get in the price for today because I don't follow this on a daily basis. If you'll notice here, we had that 3 drive to a bottom pattern, and now we've actually closed below the 61% retracement. That's a relatively negative sign. And we look at the Hang Seng that we looked at, it's the same thing. These markets, they could really be in trouble. And if you look at the Chinese renminbi, the yuan, it's at 6.92 this morning, and if the people are talking about the magical level of 7, I I don't think it's any more magical than $300 gold, but it's just a round number. But they are talking about that. But the thing is that it's trending. The U.S. dollar is really king, and it's whacking everybody, and it's hurting some of these countries really badly. Now, if we take a look at this dollar index, and we have several times, this has been a very, very bullish pattern since we completed that ABCD pattern, down there on the 20th of September. At 93.45. We're now 2 full handles above that over the last 10 days. We are now exceeding the 61% retracement again, so the only other number up there is 96.25. Now, whether the euro is going to hold up or not is the $64 question, and it certainly could. But again, if the euro doesn't hold up, and let's just get up here, or just watch it with the 4-hour chart, you'll see that there's a really big number down there at that 114.55. We've been as low as 114.68 this morning, nearly matching the low that we made last week. So this is a very, very important low in the euro. Breaking below that, folks, means the U.S. dollar is really running, and that would be a very, very bullish to the dollar, i.e., probably bearish to a whole lot of other things, but we'll have to wait and see. And that's what we're looking at this morning. One other one that looks really interesting to us, folks, besides the one that we looked at with that natural gas, that's a really beautiful pattern, but the crude oil was really, really showing up as very, very bearish last night, actually as a Friday last week, because if we look here at crude oil, that $77 a barrel level was a 61% retracement of the high from 2013, and we also had a 3 drive to a top pattern at that point. It got to 76.96 in the November crude, so that was 4 cents from the 7,700, which that's close enough for government work. It's pretty much spot on, and we've seen this same pattern in the heating oil. If we take a quick look at that, you'll notice that, let's just get the heating oil up here so you can take a look at it, and then you'll be able to see it here without any trouble. It's also completed the pattern, much like natural gas. So I don't know, maybe this is a time where the energy area might be getting ready for selling. The rest of these indices are been diverging very, very badly. We got some information here from our from our friends over here at, hold on one second here, I want to get this up here to show you. I think this is from the Sherman-McClellan. This is a chart of the day that shows the divergence that we're seeing between the Russell 2000 and the S&P 500. Well, all you have to do is look at a chart. You don't have to look at something like this. You can see that the Russell topped on September the 1st and has been down, and the other ones are, still going higher. So we'll see if that's going to mean anything or not. Let's take a look here this morning at the E-mini S&P, where we are. We hit a very important number on Friday. If you'll notice, we'll get this up here so we can see it here. The number that we hit was a 50% retracement of the low from August the 17th. And that was spot on. So far we've been able to rally up to the the 29 level. We're trading a little bit below that so far early this morning, but it's still a bit early. The NASDAQ has been by far the weakest, but we're seeing, really broad divergences between these things. If we look at the New York Stock Exchange Index and compare it to the NASDAQ, you're going to see, this is really getting to be pretty serious, folks. I don't know, maybe the rest of the world doesn't see it, but to me, the advanced decline line and the new highs to new lows, all of those things are telling that there's a very severe danger signal that is out there. I posted this chart last week. I want to do it again this week because I believe it's that important, and that shows the relationships of these different divergences: the home construction, real estate, the banking index, which is related to interest rates, of course, and then, of course, you're seeing the S&P with going straight up with momentum, lagging very, very badly. And we've seen that through our friends at Stan Harley, also Bill Meridian from Cycles Research. All of those folks are seeing the same thing. And our friend Arch Crawford, too. All of those are telling us there's something not right in Denmark. So we'll see what goes on from here. We'll just go one thing at a time. Here's the one I wanted to show you. This is from Tom McClellan, Sherman McMillan's son, who runs the McMillan Financial Publications. You'll notice it's showing the Dow Jones Industrial Average, and it's showing the New York Stock Exchange Advanced Decline line turning over. That's not good, boys and girls. It really isn't. That's a very, very negative sign. Maybe it's not going to be this way, but that's what it usually is. So we'll have to wait and see if this is going to be the case. But by far, the Russell 2000 is the weakest. Now that's the second largest of the 4 stock indices. The S&P's first, the Russell's second, the Nasdaq is third, and the Dow Jones E-mini is the fourth one. So the Russell is a pretty big one, and it has a open interest of about 500,000 as opposed to 2.5 million with the E-mini S&P. So we want to watch that. Another one that we need to watch, of course, is the we've got to take a break. We'll be right back with Norm Calls It to the Minute Winsky, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, and I believe we have our friend Norm Winsky from Astro Trend on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning. Take over, my friend.
Okay, I have my notes on the screen. Hopefully everybody can see them. And I just thought I'd do a quick review. I was last on your show on the 24th of September. That night there was a full moon, and let's see how that worked out. So there's your S&P 500, the first chart. Didn't seem to be very effective, so I got a little red arrow there. But because it doesn't work all the time, but it works enough for the time that you would not want to ignore it. Here, let's go look at the T-bonds. The T-bonds apparently like the full moon. The T-bonds are making a low on, we're going to be looking at, it's the night of the 24th, early 25th, so it could be either day. And so there's a green arrow there for the 25th, and that was a nice little trading low there for the bonds. Here's your dollar. They were 1 day off of their low of the month. So that was pretty good there on the 24th, right? And moving ahead, I know a lot of your folks like to watch the euro. That's pretty nice there on the euro on the 24th. That's, I believe, the high of the month, okay? And there's your corn. Corn was doing, I was on the show. I said, I don't like the way the corn is setting up into the full moon. I wanted to see it have a pullback, and it didn't do that. And then about that time when I was on the show there, it started kind of flattening the curve here, the up curve. And then they got whacked on that Friday, the following Friday. And that's sort of, that's the pullback we should have had back there on the full moon. So when these things don't set up right, stand aside. You know, once a good setup, you want the market to go to extreme at these key times. The soybeans behaved a little better. They had a little bit of a pullback there into the 25th where the green arrow is. And the wheat was a little bit contrary, but at least clear. And then it rallied right to the full moon there on the 24th and made a nice trading top. Here's your gold. You were just talking about gold, I think. And we had a little bit of a tiny bit of a pullback there on the 24th. Strangely enough, the silver was a little clearer picture, and it made a top there right on the 25th. Here's your, I had a little more extra room on the page here. You know, we're doing the full moon thing, which is your round up your usual suspects, which is financials, grains, and precious metals. So when I got to my precious metals page here, I said, oh, look, I got some extra room. I know it's not a precious metal, but I thought I'd see what copper was doing. And it turns out it was pretty interesting. It was a day off its top. I think that was the day close in price, and 1 day past its high of the month. So that worked out pretty well on the copper. So you don't want to ignore, you want to keep track of the moons. The other thing I talked about, the coming up after the moon at the end of the month, over the 28th weekend, we had two big things happening. We had Pluto turning direct. We often talk about the planets going retrograde or turning direct. That's when they stop to turn in their direction due to the rolling motion of the Earth. That's one of my top things that we want to look at. Because it's Pluto, we want to look at cocoa, hogs, and bonds. And then because it's in Capricorn, you want to look at coffee. And you always want to look at the stocks because it's the big basket of everything. And also we had a big cycle culmination for the U.S. Could be something big was going to happen the weekend of the 28th with the U.S. And so here we go. So we'll look at the Pluto markets first. There's your cocoa. Made a nice little short-term low there. It firmed up a little bit. Not any big, no big rally, but about looks like about a whole handle there you possibly could have made. And here's your coffee. Broke out to a little a wedgie consolidation there, right to over the weekend there. Well, on the 28th actually. Here's the hogs were a beautiful thing. Talk about a bullseye. This was a pig's eye, I guess, because there you go. The high of the month, right to on Monday the 1st. There you go. So, oh, and let's go back and talk about now the U.S. We had a cycle, big cycle for the U.S. Jupiter to the U.S. Mercury. Mercury has to do with not just, I only had communication transportation, but that would also, if you think about it, that's covers kind of trade. Trading is shipping stuff back and forth. And so that's also under that umbrella. And you might have heard we came to a big trade agreement there with the Canadians over that weekend. Matter of fact, I was a bit frustrated that the S&P, the stock market, was going just about flatline sideways into the weekend. I didn't understand why on these big planetary events like Pluto going retrograde or direct, usually the market goes to, it's like a magnet, and the market usually goes zoom up or zoom down into that point, and it was going flat until the big trade agreement was announced over the weekend there, and then we had a strong Sunday rally, and then we gapped up on Monday morning. All right, so moving on ahead here now. What's coming up into the future? We did late Friday afternoon. Most of these markets were closed except for the S&P. So I'm going to go back in a little back a step here and talk about the Venus turned retrograde at about roughly a little bit after 3 o'clock Eastern time on Friday. And the Venus markets are cattle, cotton, sugar, and wheat. And then because it was in Scorpio, we also want to look at cocoa, hogs, and T-bonds. So here we go. Here's your cattle market. We're looking for the market to get to an extreme and then stop and possibly reverse. That works about 75% of the time. And if it breaks down through, like right here, you got a little support line for cattle. If it doesn't hold that line, cattle's at a kind of a fork in the road right now. If it doesn't hold that support, and then it could accelerate to have a big drop. But it's at a fork of the road. It's an inflection point. It's either going to hold here and turn around and go up, maybe back to the top of its range, or it's going to have a big drop. So keep an eye on the cows. Here's your cotton. It's been going down, 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 forming a possible low. I'd like to see the cotton pull back just a bit here today, just to sort of tip the hat with the full moon, you know. Here's your sugar. I know you've been talking about sugar lately, Larry, and the sugar's been going up, up, up. And I think you mentioned about the 1,300 level there on the sugar, Larry?
Yes, 13 cents per pound in the March 2019 sugar.
Well, there you go. When I connect that top to that top and project out to current time, guess where it goes through at? Right about 13 cents. You see that? So I'd love to see the sugar push up one more time here today and get to about there, and then you're probably putting in a nice top. And here's the thing. It applies also to these other Venus markets. That's a Venus market. When the ruling planet of the commodity goes retrograde, in a general sense, it tends to have a bearish influence during the period of time that the planet is retrograde. It doesn't have to do it right away. Sometimes you get a temporary, like the cotton here, you might get a temporary low. Probably, though, with the cotton, probably several weeks later or a couple of weeks later, it'll probably roll over and take out that low. So, but it's still good for a trade. But in the big picture, Venus, the ruling planet being retrograde, is usually bearish for that market. So, I know you've been bullish on the sugar and you picked up a very nice rally. But I would be cautious on the long side here from this point on. Venus just turned retrograde on Friday. Okay, so Venus, I think, is going to be retrograde for about 8 weeks. So you probably go into some kind of correction. Here's your wheat.
We got to pay a few bills, Norm.
No problem.
Okay, we'll be right back with Norm Winsky of Astro Trends, 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Norm Winski. Norm, why don't you proceed?
Take one quick step back to the bigger picture here, the top of my page 5. Just show you all the big stuff that's been happening since late Friday afternoon when Venus turned retrograde. Over the weekend, my other big top category of stuff is when the planets get to 0 latitude as they go around the sun. They go like horses on a carousel. They go round and around, but they also go up and down. And so when they get to that midpoint of the up and down, that's 0 latitude. So that's the other big deal. And then Jupiter, heliocentric from the point of view of the sun, is Jupiter's changing sign, going to go into Sagittarius. And then, of course, tonight we have the new moon. So you add that all together, and you have my highest energy window of the entire month. So that's why I asked to come on the show now. Okay, so moving on, going back to where we were. We're finishing up the Venus planets, Venus markets. Last is wheat. There's the wheat. The wheat's kind of near the top of its little trading channel there. And it could be putting it a little top here. Not much of a rally though off the lows, so it's not too exciting. I like to see markets get to an extreme. The bigger the extreme, the bigger the potential reversal. Let's go back and look at the next thing. We're looking at the Mercury at 0 south latitude. That particularly Mercury is particularly important for your grains. So you look at the corn, beans, and of course always the stock market and wheat. And so let's see, we got the, where did that go? Well, we gotta go, oh, I guess we're gonna flip back to the big earlier here. Okay, where is that? Wheat. Here we go, here's your grains. So there's your corn there. We're over here now at the end of the chart. I did these last night, and you can see the corn is kind of flattening out. We could easily put it in the top here in the next day or so. It could be, we're looking at tomorrow, could be turnaround Tuesday for a lot of these markets, you know. Here you go. There's soybeans up. Looks like it could be ready to make a top. If it doesn't, it's going a lot higher. All these markets are coming to a big inflection point by tomorrow. Okay, wheat. We just looked at the wheat, so we're good to go on the grains now. What else we have? We have next thing to look at. We talked about Sagittarius, Jupiter. That's going to be your corn. We just looked at the corn. Might affect the oil a little bit and your stocks. And so we'd love to see the stock market have more of a pullback, retest Friday's lows. Friday may have been a low for the stock market. We'd prefer to see one more big push down today, but that Friday might be all we got, you know. So yeah, so we can see we got the we got to look at the oil now. There's your crude oil, and like you said, Larry, a little while ago, the crude oil is pulled back here. Like to see it pushed down maybe to the pull back, but today would be ideal. Not no promises or guarantees it's going to happen, but I would ideally like to see it maybe pull back to about $72 on December crude. So anyway, that's it. Believe it or not, Larry, I think we've gotten through everything. I'd be happy to. We got time for questions this time. Don't usually get there.
Well, we have one question from one listener, and that is, you mentioned you have all these things happening, and one of the reasons why you wanted to be on the show, if you had to scale this between 1 and 10, what would you give this as a scale for major turning point?
Potentially, it's like a 7 or an 8, out of 10. It's the highest energy window of the month.
Okay.
Yeah.
What does it take to get a 9 or 10, Norm?
Ooh, we have those on rare occasion. I don't know. I just add up all the planetary stuff. Usually comes from big clusters of planetary events.
Okay.
Let me just pass on some general market methodology that might help you. Most people are trading on price out there. Again, told us that time is more important than price. My whole system is first and foremost time. The key times will give you the key prices. You don't have to keep looking for that magic price. You know what no market will turn before its time. So if you know what time it is, so if it's the right time, that market will turn. And just look for support or resistance level at that time, and then you'll probably increase your batting average quite a bit. That's been my experience. So it's very simple. Don't need any moving averages. Don't need any oscillators. Don't need to count and recount your Elliott waves. It's all very simple.
Make it sound pretty easy, Norm. How can the folks reach you if they'd like to learn more?
That's a great idea, Larry. Here we go. I'm in beautiful sunny Florida. There we go. There's my phone is 239-594-3939. That's 239-594-3939. Here's my email, nwinsky at embark with a Q in the middle, EMBARQMAIL.com. And there's my Skype is norm.winsky. And happy to entertain more questions if there are any out there.
Yes, sir. We have one question, and the question comes from someone across the pond over in the UK. And have you ever written a book, or are you going to?
I don't know about the future. I have not written a book in the past. I published a book on financial astrology, and a famous at one time in the early 20th century, there was the top astrologer in all of Europe was also doing financial astrology, and he advised had the New York specialists as a client and ruling heads of Europe as his clients, and he wrote a book. Actually, first he wrote a paper in the 30s, which was the first astrological paper ever presented and accepted before a scientific body. It's called, and then it was expanded in the 40s to a book. It's called the Stock Market Fluctuations and Cosmic Influences. The gentleman's name is Gustav Lambert Brahe. He's very interesting.
That's spelled with a Y, isn't it, that Brahe?
Yes, sir. Brahy.
And that is that paper still available?
There's somebody who well, the book is I think available. I think if you Google it, I have I have a business relationship, somebody who's been selling that book.
Mm-hmm.
Yep.
Okay.
So that's an excellent book on just a general, very comprehensive book on financial astrology. But an even better way is just to call me, and you get the free class. I have the free class, the free letter. You get the whole 1 month subscription. I'm going to show you how to do the longer term trades, the swing trades, show you the day trades. Those are phenomenal. 75% batting average on all my stuff. And I think you'll be very happy. And of course, Larry, if you mention Larry's name, the free class and the free letter and everything comes with a double your money back guarantee, right, Larry?
You can't beat that. Norm, we have another question about what is your longer term prediction in crude oil? Do you have anything that you would like to mention on that?
Not really. I just take these things one step at a time.
Okay. What do you use? About a 2-day window? Is that what you're looking for?
Yeah, well, 2-3 day trend on the bigger trades there, and you look for some big aspect where the planets line up and they say, look at that market. The planets tell you what market to look at and when to look at them. You know, it's minimal thinking, you know. That's what I tell my people. We got to stop thinking.
Well, that I'm
be,
very good at that. As I get older, it happens more and more often. That's for sure.
There you
One
go.
other,
And Larry, Larry, the less you think in the markets, the better you will do, right?
I can believe that. Norm, one other question, and that is, do you do any mundane astrology on the political situation in the world, or anything like that at all? Like one of our listeners is asking.
Very little. I tip my hat to Mr. Meridian. He's sort of the top guy on that in that area there. Every 4 years, just for fun, I do the presidential election, and I've batted about 80% of that, you know.
Norm, thanks for joining us. We'll have you on again soon. Norm Linsky of Astro Trend.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we're going to take a look at the dollar yen. You'll notice here that we got up to that 114.50 level on Friday, and if you notice, if you'll go back and look at it over the past year and a half, every time it's got to that level, 114.50, we've been there 1, 2, 3, 4 times now, so there must be something there that is very important. We had a beautiful 3-drive pattern, as you can see, that started back in May, had the secondary bottom in August, and then the top Perfectly symmetrical ABCD came in at 114.50, so that'll be an interesting one to pay attention to. Whether that has anything to do with what's going on in the Asian markets or not remains to be seen, but any move above the 114.75 level, that's 170 pips from where we are now, would be a very, very bullish, it would tell you that your move is going to go a great deal higher. Remember, this dollar yen is the one that Tom O'Brien made very popular in 2012 when he talked about King Dollar, and it was trading at around 73. So we'll see what that's going to say. Someone's asked a question about the potential for the crude oil. Folks, if you look at that crude oil real closely, if you get the letter, you'll notice that that weekly chart is a 3-drive pattern, and it was spot on, right at the 61% retracement, and that would mean a minimum of a $6 break. That would take you down, to around the 71 level. And but remember, this has been going up for quite some time. This is when it was down around 40. Nobody ever thought it would get to 77, but here's where we are, and we need to watch that. We're having a little bit, the markets bounce back a little bit from the early morning lows, so we'll see how it ends up today. We do have this new moon, so we'll pay very close attention to that. As Norm mentioned, a lot of cycle stuff coming in over the weekend today and tomorrow, so we want to pay close attention to that as we look at some of these other markets. The gold is so far has held. The silver is held spot on right at that 1432. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.